Hello everyone, welcome back to another Lumley trading live stream. Today we are live about an earlier than normal, so we can cover CPI and the core CPI release. We do also have continuing jobless claims, but again, nothing's really going to matter apart from the CPI release. This is going to be the main mover. So it's just in preparation. So what we have year on year when we're looking at core CPI, we're looking at a forecast of 4.8%. And that is in line basically, or the same as last month. And then when we go over to look at normal CPI year on year, previous month was 3%. Now we're forecasted at 3.3%. So a bit of an increase. And again, that's what you're seeing in the thumbnail where we say CPI is going up, not core CPI, just normal CPI. Just to state the month on month, so the month on month for normal CPI is the same as previous, so 0.2%. And if we look at the core CPI month on month, that is also expected to come in at 0.2%. Again, the same as previous month. So they're the numbers we're paying attention to coming into this release. So again, obviously, we'll be paying attention to what's coming out. We got 4 charts on the screen. So again, we got the S&P futures on the left, Nasdaq futures second in. Third chart is the 2-year bonds, and then the fourth chart is euro dollar. So again, don't forget that will be inverse. If you see the euro dollar go down, that means there's actually strength in the dollar, and if you see it go up, that's obviously weakness in the dollar. So now let me just quickly grab up the chat and stuff on my phone so I can see everyone who is joining. Let me know as well, guys, if you are looking to actually trade this release, or if you're just watching to see how we can move, and then also just get a bit of information on the numbers and where the inflation is. There we go. Okay, I've got the chat up now, so all good. So again, we have about a minute and a half now until this release coming out. There we go. Put that there. Put that there. Cool. Again, just to confirm the numbers, it will come up on here. So we'll pull this over if this comes first. We will be watching for the numbers over on Bloomberg as well. So really just wherever the numbers come first, probably will be Bloomberg. But again, the main things we're watching today. So you got the core CPI month on month. Oh, not that one. You've then got the year on year core CPI. We then got the month on month normal CPI, and obviously the year on year. So that's going to be our main focus. These 4 releases. I think the main one could be, or should probably be, actually just normal CPI, and that's just because this one is higher than expected, or forecasted to come in higher than the previous. So if this one comes in, this is going to be the main one I think going to be on watch, because if this one can come in lower, if it lower than 3%, the market will have a massive rally. But even if it comes in a bit below, maybe 3.2, 3.1, could still see quite a big move to the upside. Okay, we have about 10 seconds to this release now. There we go. Okay, smashing down, got bought up instantly. I'm guessing the number's strong, so waiting for this number. Not got it as of yet. There we go. So, again, in line, lower than expected. In line, lower than expected. So again, 2 lower than he expected on the month or the year on years. That's obviously super strength. So that's what we're watching for. Should be able to hold this move again. We might pull back. If so, could potentially look for a bit of an entry as we pull back. But overall, we did lower than expected, which is again good for the stock market on both the year on year for the core and normal CPI. Numbers in lower than expected. Impressive. Yes, that's right. Yeah, going to be flying, hopefully. Could end as well. Apple's basically losing streak. Apple's been pretty weak recently, so we could see this move over to Apple as well. Also just seeing as well the US jobless claims increased by 21,000 to 248,000, which is a bit higher than the forecast of 230,000. And then you're also seeing the continuing claims, or the jobless continuing claims, minus 8,000 to 1.684 million. Just for a breakdown as well on the CPI energy prices. So the energy prices went up 0.1% and the food prices went up 0.2%. Nasdaq already up over 1% on this release. Also seeing US real average weekly earnings unchanged in July. So basically everything that dropped today was basically bullish news for the market, or for the stock market at least. So again, don't forget, you're basically seeing across all four charts everything go up. Again, the stocks, so the first two charts, you got the bonds on the third, they're most likely going to react the same. And then you have on the right, the dollar is actually weak again, that's euro dollar, so dollar is to the downside. Dollar is showing massive weakness. As to be expected as well, don't forget, dollar is most likely going to be quite weak looking forward anyway. We got one last hike, and then after that hike, you'll probably start seeing the dollar start to show weakness against other countries as they continue to hike, especially against, say, the euro and the pound. Starting to pull back a bit now. We can actually zoom these in a tiny bit. Also seeing gold extend gains after the CPI release. US short-term interest rate futures gain after CPI inflation report. Trader firms bet against another Fed rate hike. So again, now the likelihood, and that's why the market is going higher, or the stock market is going higher, because there is less likelihood of a rate hike. Every time these numbers come in lower than expected, it's always going to be less likely for a rate hike. Also seeing the dollar yen, so the dollar falls 0.26% against the yen, just within the first 3 minutes of this release. So I can see giving back some of these gains now. Also seeing TLT drop in. Trying to find out a bit more of the shelter information. So let me just try and find that out real quick as well, because that'll be the only other key information we want to take out of this CPI. So I don't care about that. There you go. I think this is where I can find out the shelter information. Okay, so shelter is leading to about 90% of the increase we got in this July. Yeah, basically shelter is running all the inflation then, still. Very small inflation, obviously, on the food and the energy is mainly all down to shelter. Here, this is what we're looking at as well to see this sort of information. I'll make sure you can still see the stocks. So, I wanted that to go full screen. Again, shelter at 0.4% of the inflation, so double that of food, and quadruple or that of the energy inflation factors. So again, they're normally the two headlines, food and energy. And then obviously always key is going to be shelter. So that's a big thing. Again, shelter, so that's going to be rent of primary residence is up 0.4. And then owner's equivalent of rent is actually up 0.5. So again, this is just showing us, and again, if you look out, it's turning more and more into a renter's market as of right now. The cost of ownership is exceptionally much higher than renting in this current environment. Again, it only changed about a year ago, but for about the last year or so, really since I guess we've had the massive rate hikes, all it's done is make the cost of ownership cost of ownership gets super expensive compared to the rent. Also seeing de-inflation though in hospital services, and transportation services is still up 0.3, mainly on the motor insurance. However, airline fares are down 8%. So we'll see how that starts moving names like Delta and stuff like that. I might have a quick look now. If I unlink that, I don't have to read the chart. Delta, yeah, you're seeing Delta. I'll check some other airlines, but you're seeing them gap slightly off this news. Yep, all of them, UAL, Delta. You're seeing these names pop a tiny bit off this news. Again, nothing astronomical, but you are seeing a move. And you're seeing Jets also, obviously, gapping a bit, which is the ETF relating to all of them. Basically faded that move already as well. Which is quite crazy. I want to see what they're saying on CNBC, if anything. Yeah, it's 7 minutes and they faded the complete and utter move. We'll let this news play out a bit, see what they're saying as well. Get another opinion.
Significance of this morning's data, Michael?
Well, I'm a little less sanguine about it than I think the bond market is. I mean, what I see is the second month in a row. So I'm focusing on core CPI 1 month change to kind of avoid the problems of looking 12 months back with base effects and things of that nature. And I don't see an improvement from last month. We ticked up 0.2 of a point in July, ticked up 0.2 of a point in June. You know, that to me, you know, could indicate a downward trend. Certainly 0.2 per month is less than what we had several months ago. But my worry is that, you know, maybe we were at an economy with 5% underlying inflation. We've now gotten to an economy with 4% underlying inflation. Financial conditions aren't tightening. And so I don't think we can stay at this level without further interest rate increases. And that, I think, is going to be the challenge facing the Fed. I think they want to see a downward trend. I'm not sure we see a downward trend.
But, Michael, what does that mean, though, come this, you know, push this out 6 months, 8 months, 12 months then, in terms of the broader piece?
Yeah, so, you know, the Fed has kind of indicated...
So we just put a poll into the chat. I'm interested in what you guys are thinking. You taking this release as bullish or bearish? Because, again, we did come in lower than expected on the headline numbers. But don't forget, you're seeing things like shelter continue to be the leading cause of inflation. And so you taking that as overall negative or bearish?
0.1.
Or negative or bullish?
I think a November hike is likely. And going into 2024, I think the Fed is going to want to see evidence that that underlying inflation is on track to hit its 2% target. I think they'd be comfortable with that taking 6 months. They'd be comfortable with that taking a year.
So we already got 5 votes on it, 100% bullish so far.
Kind of a level downshift and getting stuck at, you know, again, around a 4% underlying pace and a trend back down to 2. The data, I think, support a shift down to 4. I'm not sure the data support a trend that looks like it's headed back to 2, again, without some additional...
Okay, the ES futures, basically that is our anchored VWAP. That 4,504.
That's where I'd love to
so we'll see how we can hold that level.
We saw last week some really strong...
Also as well, again, we've obviously got the VWAP, broken the VWAP on the bonds. We've got the VWAP on the NASDAQ, so we'll see how we can start holding these levels. But again, technical levels that aren't going to matter all that much off fundamentals. We'll move the news to the top right as well, just because we're selling off now.
About being cautious here. We know that the impact of those July rate hikes we won't see for another couple of months. And I understand that they're trying to get inflation down, but we have to worry about what will happen to the labor market if we go too aggressive on the rate hikes. And so I think we're in this really good place right now where we have 3.5% unemployment, we have real wages rising, we have...
Well, short-term bullish, longer-term bearish, +1. Why is the NASDAQ dropping? Again, because this is kind of like a double-edged sword. So you're seeing the numbers come out. You're seeing, okay, yes, the headline numbers have come in lower than expected. That's normally quite bullish. But the leading cause of all this inflation is something that's likely to stay, and that's shelter, and something that affects everyone, and it's going to be a big kind of factor. It's not like you can really reduce costs. Most people aren't going to move. It's not going to make sense. That cost increase, you're still paying 10 grand to move, or whatever cost it is, especially if you've got to move furniture. So it's not something that's likely to go down all that quick, and I think that's the main reason why that it's now taken this as negative. Again, if it was something more like the car maintenance and stuff like that, you could probably expect that to be short-lived. But something like shelter, you're probably going to see it hold, and that's again why I think we're taking this so negatively. Short-term bullish, longer-term bearish, and yeah, I can definitely agree with that. I think once we have that final hike, I think a lot of this upward move has been priced in, so I think then we could actually be quite weak, weirdly, after we have that final hike. But I guess we'll see how this all reacts. As well, any of you trading this, or you just been watching the release? I'm personally not trading this. I'm just going to watch how we react. Hopefully it'll provide some swings as the market opens, but I'm not swinging the initial release.
And the AI fever is breaking, so the overall market is dealing with a slightly more complicated case. I think one of the messages of the stock market rally in the first part of this year is that even though the Fed's target is 2%, 2% is by no means like the only perfect level of inflation for the stock market. Inflation coming down is fine. We don't know what level we're going to settle at. Kind of a slow and steady Fed is okay for the markets. It's just a matter of what happens to growth along the way.
Yeah, fair enough. Angela, I'll give you the last word.
Do I think it's going to be bullish or bearish? I think it will be quite neutral, I have to say. I think you'll see the market open will probably open within kind of where we are now. I don't think we're going to see a massive move off this release, because I think it's just too mixed. You don't have much inflation on the things we normally see the inflation on, but the shelter's still holding high. So again, I think it's going to lead to a bit of confusion. So again, I think it will be quite neutral. If I had to pick one, I would probably, for some reason, say bullish, but again, we'll see how it plays out. And again, that's the main reason why, especially on days like this, I prefer swing trading than day trading, because I think it's harder to get that day trading trend compared to getting the swing trading levels. But yeah, definitely choppy. I could definitely see it choppy today. Probably be quite range bound, and if it is, this is normally the time I'm looking to play those like SPX 0 data expiration trades. Can be quite good on these range bound days. So again, we'll see. Have to wait until the market actually opens and how we're moving. But if we kind of just see it kind of whipsawing all around, then yeah, probably just be something I 0 data expiration trade on the SPX options. I'm watching, but I have a few swing trades that will affect it. I think it will keep the Nasdaq from crashing further. Bullish in that if it is stabilizing. What kind of swing trades are you in? Are they all shares, or you hold it options as well?
Not going back to where it was pre-COVID. Even if we see all zeros, it's not going back to pre-COVID, and that is huge.
People don't care, Rick, about the inflation rate.
Okay, just shares. At least then that should be quite good. I mean, yeah, people holding options overnight right now could be a bit screwed, because whenever we stay flat off a CPI release, again, options are pricing in the volatility. So if you just share, should be alright, especially if we open up pretty flat.
Because the inflation rate is only 2% or 3%. They say, no, my buddy who runs a couple boats up in Cape Cod still cost him $60,000 to replace his engines that used to cost him $50,000, and he's trying to figure out how to run his business because the price of those boat engines has gone up, and it's not come back down. Now, the trouble with that, if I could just continue quickly, is if you bring down the price level, you also probably bring down the wage level. So there's two sides to the inflation equation. So people may want to feel better about prices coming down, but in a generally deflationary environment, your wage and your income comes down too. But that's the political nut right there. It's the price.
What you also seen quite weird, I guess he was talking more about the jet engines and the cost staying up. What you can also see, and I mean, we can even put it up now, I'll try and find some examples. you're also seeing, and again, like we know, shelter is the leading cause of inflation right now. What you're seeing is houses get bought for, say, 100 grand, and literally a month later being relisted for 120, 130 grand, and they're actually selling. So, I mean, it's like there's just no weakness really in this housing market, which is, again, obviously not going to be great for the shelter inflation. So, I mean, I'll just pull up, for example, doesn't really matter. Put in 60 to 100 grand recently sold. Okay, cool, just making sure that turned down. Let me quickly get this into and find, yeah, recently sold, and we'll probably see a lot of these names where you check where they've been listed. It's actually kind of crazy. So I'll throw this just in the corner right, so we can still see the Nasdaq and the S&P. But again, you're just seeing this everywhere. We'll see if this house has been relisted. A lot of these have been relisted, and you're just seeing them go up way more. Okay, no, so this was 2021. Wish there was a way to filter it by relisted, but I was checking this out literally a few days ago, and a lot of the names you would see just being relisted relatively quickly. Again, it's especially on these cheaper ones, I've noticed it. I haven't really been looking more at the, 400,000 or 500,000 ones, but you're seeing quite a lot. Why is it not really showing much? Yesterday it was quite easy. I think it was literally yesterday. I was seeing them non-stop. But we'll flip through as the market's flipping around. Basically back to break even off this release again. I'll even put kind of a dotted line here, just so we know where the CPI release came out at. And there we go. I'll do the same for the bonds, and then I'll actually look at it off screen so I can try and find. The bonds actually open quite weak. Obviously we got this kind of fake out move before, which would have triggered a lot of people's orders if they're trading the news. But on the bonds, the move actually would have really messed you up. Don't know what's happened there. We'll mark out that as well. And then, yeah, let me try and find some of these examples then over on Zillow. Again, I'll leave that screen just on. And let me quickly, I'll just put like some music or whatever in the background, so while I'm not concentrating fully, we can still hear something.
The Dow up 0.5% or about 160 points after the CPI, which was a little better than expected, but the jobless claims were a little bit worse. Markets show still the Nasdaq with probably the heftiest gains this morning, up, Andrew, about 1%.
Tom, let's talk Disney shares gaining.
Yeah, I'm cautiously optimistic. I think now the question is if Jay Powell will hold interest rates at the next meeting. I think they'll still hike. Actually, I'm not even sure how much they're pricing in now. I think it's still over above 50% though. I think the next rate is likely because even in the previous FOMC statement, they were pretty hawkish. We're still seeing the shelter inflation quite high, so I can't see them really giving a reason not to hike. But again, we only got to wait, what is it, another 3 weeks or so until the next FOMC? Or is it 4 weeks? So I guess we'll see then. But I could definitely be leaning on the side where, yeah, we have this one, maybe one after this, or one more hike. But yeah, I don't think we're going to see massive more. But I think, again, no matter what happens with that, I think that'll be a great trading opportunity within itself. Because that's when I'll just be moving quite a bit of money over back to pounds and then just really looking to hold the pounds as the dollar gets weak and then convert it back, basically. Any money I'm not really going to need for the next few months, just, yeah, really converting it back to pounds and then holding it in pounds. Market being bullish at the moment is pricing Jay Powell's decision, in my opinion. Yeah, I mean, that's all it is. It's always a gamble of these releases. You'll see what traders are pricing in, probably released maybe as the market opens, maybe a few hours after. and then that normally be the deciding factor. At least that's what we've seen on previous CPIs. But I don't think this will really change their opinion all that much. So again, I do think the move will be quite limited. But again, we'll see how this all plays out.
Much extend to sports, and as ESPN's launch as a direct-to-consumer channel is not a matter of if, but when. They're talking to potential investors about how to be a part of that.
The strategic partnerships that we're looking to create and that we're actually in discussions about are aimed at accomplishing a few things. One, content, meaning increasing the content that ESPN offers, and two, possibly, I'll call it distribution and marketing support.
Iger also announcing they're working on another way to make money, which is cracking down on password sharing, saying they will roll out monetization tactics for this next year. So Andrew, in that regard, he's very much really taking a page from Netflix.
Right. What's your sense? We were talking about this in the last hour in terms of timing. Obviously, this Hulu or the Hulu purchase, the remaining piece that's owned by our parent company, Comcast, is going to come in 2024. He's talked about a whole bunch of things in terms of selling or spinning off linear channels and other types of ways of raising cash. Do you imagine him doing that before the Hulu deal? And what do you think that really looks like?
I mean, I think the Hulu deal is fairly imminent, right? We're talking about right around the beginning of next year is when it's expected to happen. To me, I think what's
no problem, Muzzle Paint. Thanks for watching. Good luck with you as well. Catch you later.
Is figuring out what the future of ESPN looks like. The fact that they're talking, according to my reporting, ESPN and Disney are talking to all the major leagues, the NBA, NFL, NHL, and MLB. They're talking to them about coming in as investors in Hulu. I think what's so interesting about having them be their strategic partners is that would incentivize everyone to figure out the best way to monetize ESPN as it goes direct to consumer, as well as having a linear option. I think in many ways it makes sense to figure out that first, because the linear TV bundle will be impacted by what ESPN decides to do. I always say that sports have been the glue that holds the TV bundle together. So many people subscribe to pay TV because they want the ease of it, but they also want to know that they're going to be able to watch live sports. And so ESPN obviously has been a factor driving up the cost of the TV bundle. So it'll be interesting to see, once they figure out what this future of ESPN looks like, what that will mean for everyone else in the TV bundle, including those Disney linear TV assets, which is, of course, ABC and all those other platforms.
And is your sense we're just talking about, not just, but that we're talking about the big leagues investing in this and investing in ESPN rather than Hulu in this case? But also, are we thinking that, there's been mentions about an Amazon or an Apple or another kind of big tech company stepping in as a partner as well? Do you think that that's in the cards?
Well, there was speculation that Disney would sell entirely to Apple. Yesterday on the call, Bob Iger shot that down. It seems like he's working on a lot of other stuff before that would become an option.
Okay. Julia Borston, thank you. Appreciate it. When we come back, what to watch ahead of the opening bell. The futures, they are in the green this morning. 179 points higher on the Dow. Back after this.
Okay, I guess that's it anyway for that CPI release. So we'll probably call the stream here anyway. And then, yeah, I guess we'll be live tomorrow just for normal trading. But again, I think this will be taken for quite neutral. I think once you see what the traders are pricing in, that normally leads to a reaction. So we'll see where that takes us. But yeah, again, I'm mainly just now going to probably look for some swings off this. It shouldn't affect the swing from a fundamental standpoint all that much now. So should hopefully still provide some good trading opportunities. I got out of most of my swings yesterday. So look at now to open some new ones with the cash. Not bad, just another Thursday. Yeah. Alright, anyway guys, again, thanks for watching. We'll catch you in the next one. We'll have videos out today for the earnings stocks that are releasing their earnings like we do every day. And again, we'll have a few other analysis videos out. So hope to see you in those. Again, we'll be live tomorrow. See you then.